Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Massar and Tim Stenovec from Bloomberg Radio.
From Nvidia's impact on the equity trade today to the details behind Nvidia's earnings and outlook. That's where we want to go. As we noted, the superlatives continue. The chipmaker at the center of the artificial intelligence boom, Nvidia, shares topping $1,000 for the first time. We talked about the market cap. A blowout quarter. So let's get to it. Back with us is Bloomberg News U.S. Semiconductor and Networking reporter Ian King. He's in our San Francisco bureau. Ian, you know the superlatives. We're watching the stock up above $1,000 for the first time, soaring in today's session. Walk us through all the numbers that showed Nvidia continues to deliver, in your view.
I mean, obviously, the first place to start is with the revenue guidance. Analysts were looking for a doubling year over year in this current quarter. Nvidia said, oh yeah, we can do that and we can do a bit more. So even though there were lofty expectations, they managed to set expectations even higher. The data center business is already bigger than Intel and AMD, and it's getting bigger quicker than people had projected, more than 400% year-on-year increase in that particular business. So all of the fundamental numbers that Nvidia needed to show were heading in the right direction, it was able to deliver on.
It's pretty, again, incredible to see the stock reaction today. Shares higher by more than 10% as we speak right now, Ian. I was a little struck, and Carol mentioned this, by a couple of the things that they also announced, the 10-to-1 stock split coming next month, and then increasing the dividend. Curious if you have any thoughts on either of those things.
Well, I mean, as you were just discussing with Bailey, I believe that the stock split is something that's aimed at retail investors, but it's also aimed at their internal audience as well. A certain percentage of the shares get bought by individuals. They get like a discount / allowance that they can buy at a certain point. So, they want to keep their employees happily, right? You need those engineers, you need that staff that's so invested in what you're doing. So that might be part of it as well.
Can I ask you though, because I did scratch my head a little bit about it. I don't know, I was going back and forth with a brother of mine who has been in Nvidia for years, and we're going back and...
Got to get your brother on the show.
I know.
Does he know that?
Yeah, he's pretty smart, just really well read. But about the dividend, because I always feel like companies do that when maybe growth is slowing or something to kind of keep investors happy. Is there something, though, connected with that stock split that they raise the dividend so much?
I mean, for semiconductor companies, which are massively capital intensive, even when they don't own their own manufacturing, the question is, how much are they spending as a percentage of their revenue on R&D, on design, on making sure that the next product's coming along? And you look, Nvidia is one of the biggest spenders by any measure in the chip industry. So as long as they're doing that, I would say that most Nvidia watchers don't care. It's just something nice to have on the other side of things.
Well, you talk about the R&D spend, and it really, certainly seems to be paying off for Nvidia. Having said that, talk to us about the development cycle. And I bring it up because I was listening to Bloomberg Intelligence man Deep Singh earlier, I think it was on Surveillance this morning, about how for Nvidia, it's kind of a shorter time, like almost every year, and that is going to require companies who want to have the latest and greatest from Nvidia and in the AI chip world, that they're going to be adjusting their CapEx spend to include that every year. So maybe, different from Moore's Law, right? That, the increase in terms of components on a circuit and processing ability doubling every year for 10 years. So maybe something's different. I don't know. Is it shorter? Is it a much more kind of, new development cycle for Nvidia that's going to keep these numbers growing? Sorry, I'm not being very eloquent because you're smarter on this than I am.
Not at all. No, you're going to a good point here, and it has numerous aspects to it. Basically, what Jensen Huang, the CEO, said, he said, look, we were bringing new products to market for this market roughly sort of every 18 months or so. Now we're going to do it every year. We're going to do it every year for a number of reasons. He, put the salesman routine. Look, we're helping our customers. This market is changing rapidly, so we need to bring stuff to the market much quicker than we were doing to help support this, to help bring these new capabilities. Everybody wins. Everything, the pace of innovation increases. Flip side of that is, you remember earlier this year we were talking about what AMD's doing, what Intel's doing. How are they going to get into the market? And what Jensen Huang has basically said to them is like, that moving train that you were trying to catch is going even faster, good luck. And so that's what's really going on a competitive basis there as well.
And Moore's Law, I meant doubling every 2 years, so forgive me. Yeah, so much faster here.
Ian, I want to that end of this, of jumping on that train, I want to talk a little bit about margins, because the company said that margins for the gross margins will be 75.75%. In the current quarter. As you noted, this is more like a software company rather than a chip company. And you yesterday talked about Intel being in the low 60s at its height when it really owned the server market. What can history tell us about the duration and durability of margins like this for a chip company?
Yeah, right now their margins are what they want them to be, because it's just really a case of, well, our prices are sky high, we're sold out, we can essentially charge what we want, so obviously the pricing is very good for margins. On the flip side of that, as we just discussed, they can spend what they want. It's, how much do we want to spend on R&D, how well do we want to reward our employees? So the margins are sky high, but they could make them artificially higher. The fact that they're spending heavily, the fact that they're able to charge a lot, that's something that's going to probably persist. So they're setting very high targets, but they could be even higher. So, as a measure of their health, it's pretty good.
Do you agree with Jensen's comment that the freight train is now moving faster and these companies will have a more difficult time, the AMDs and the like will have a more difficult time catching up with Nvidia?
Jensen's racing, that's one of the things that comes across in pretty much any time he says something. He's constantly aware of the tension that exists in his business and his market, and he's consciously trying to shape both what his company does and his understanding of the relationships, where we are in the cycle, where we are relative to the competition, what the customers want. He's trying to shape his narrative to fit that. He's very clever, and he's showing people that he understands what's going on and what he has to do to stay ahead. And that kind of institutional paranoia, that history of being the little guy, still very much present in what he's doing.
All right, 30 seconds left here. So who is most likely to catch up to Nvidia and when?
Talk to me this time next year and there might be somebody. But right now, it looks like everybody's just picking up the scraps.
Unbelievable, and just a fascinating story. Ian, thank you. I know it's been a busy 24 hours for you, so we really appreciate it. Ian King, our U.S. semiconductor and networking reporter at Bloomberg News, joining us from our San Francisco bureau. As we mentioned, Nvidia shares continuing to trade higher, still up about 10% in today's session. And again, you're now looking at a $2.5, almost $2.6 trillion market cap company. So it is in the league of some of the largest market cap companies in the world. So far this year, Carol, this was after yesterday's last year's blockbuster year for the company. Nvidia shares are higher by 111%. Yeah, I think it's the third best performing group in the name in the S&P this year, after being number one last year.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app, or watch us live on YouTube.
Well, the November presidential election in the U.S. now, less than 6 months away, there's a new variable to consider. And as far-fetched as it may sound, the prospect of Donald Trump, should he find himself back in the Oval Office and then never leaving, is weighing big time on the minds of some voters. This story featured in the forthcoming issue of Businessweek Magazine, soon on newsstands and now on Bloomberg.com and at Bloomberg.com/Businessweek. Also, of course, on the terminal. With more on his story, Bloomberg Businessweek national correspondent Josh Green. Josh, the author of The Rebels, Elizabeth Warren, Bernie Sanders, AOC, and the Rise of the New Left. Also the author of the bestseller Devil's Bargain, Steve Bannon, Donald Trump, and the Storming of the Presidency. Josh joins us from our Washington, D.C. bureau. Josh, what's going on here with the former president's rhetoric, what his advisors close to him are telling you, and the idea of taking him seriously but not literally kind of comes to mind when I read this?
Yeah, well, I've been talking to a Republican and Democratic strategist recently who'd mentioned that they were seeing something strange in the focus groups and polls they were conducting, and that is that a lot of swing voters were worried that Trump was going to declare himself president for life if he's reelected in November. And as I did some reporting on the source of these worries, basically this is something that Trump likes to joke about. Of course, there was the January 6th riots that gave a lot of people pause. But it's a factor that I think isn't being paid a lot of attention to, but both Republican and Democratic strategists are seeing it and wondering if this is going to have an effect on the outcome in November.
You know, it's interesting, and Josh, we don't certainly have to tell you, but this idea that former President Donald Trump will say something and people will be like, well, that's Donald Trump. Like, you know what I mean? They're kind of dismissive. Is there something, though, different as he runs for a second go at the White House?
Yeah, I think there are a couple things. I mean, as you mentioned, you know, the Trump people sort of laugh this off as this is just Trump being Trump. You know, he likes to say outrageous things to get a rise out of liberals. He's talked a little bit about, well, should I maybe serve 3 terms? Just this past weekend in an NRA rally, for instance. But while a lot of people write it off as just Trump being Trump, this particular group of voters seems to be listening to it and worrying about it. And as strategists have kind of plumbed the reason for this, they've come up with some interesting theories. And the best one I heard was that it was really what was driving this fear was the Supreme Court's decision to overturn Roe versus Wade. A Democratic strategist told me that what that did was convince a lot of ordinary voters that things they wouldn't have imagined possible, like Roe versus Wade being overturned, or Trump abolishing term limits, suddenly seemed real enough that these voters were worrying about it, and it seemed to be pushing at least some of them back into Joe Biden's camp.
Well, you get into the piece that the idea of president serving only 2 terms, whether consecutive or not, hasn't been in the Constitution since the days of the Founding Fathers by any means. It was ratified in the 1950s after FDR served more than 2 terms. Can you talk a little bit about the history of presidents since 1950, talking about the potential repeal of the 22nd Amendment, or at least alluding to the idea of serving more than 2 terms?
Yeah, absolutely. I mean, as I did a kind of a deep dive in this piece, what was interesting was that almost immediately when after the 22nd Amendment was passed, popular presidents and their advisors in both parties have kind of objected to it. Ronald Reagan said in 1987 he would like to overturn it. Democrats in the House of Representatives twice, once during Bill Clinton's presidency, once during Barack Obama's, tried to push legislation overturning it. So it's something that popular presidents sort of chafe at. But that being said, the hurdle to actually get it overturned and abolish term limits is almost unthinkably difficult. It would require large majorities in both houses of Congress. It would require large majorities of state legislatures to approve it. So it's not something that's plausibly going to happen. And yet still, people have learned that Trump is a norm breaker. It's something that gives them pause, and it's weighing on them as they make their decision on who to vote for in November.
Hey, Josh, there are focus groups, and then there are focus groups by those who have been doing them for some time that maybe you sit up a little bit straighter and take note. And is that kind of what's going on? Because I am curious. I think it was the Democratic individual in your story from David Binder Research who's been doing these focus groups for a long time. Like, I just do wonder, is there something that just makes everybody kind of be like, wait a minute, there's something different this time around? Because you're like, as you said, not the first president to maybe say, yeah, I'd like another term.
Yeah, I think that's exactly what's going on. I mean, if you go back to 2020 and the January 6th uprising, it's sort of shaken a lot of people and made them realize that, well, like, maybe things aren't as smooth as we expect. The focus group guy that you were referring to has sort of said, you know, historically when we conduct these focus groups and we throw out these kind of wild scenarios, voters usually push back and say, oh, that could never happen. But that kind of pushback now, he says, has stopped in his focus groups. I was able to sit in on a couple of these and sort of see this myself, and people are just much more willing to believe that crazy things can happen, and that maybe one of those crazy things will be Trump declaring himself president for life. As implausible as that sounds, I think, to most voters.
Well, I was struck by a woman who you spoke to who actually said that she would vote for Biden even if he is in a coma, despite the fact that back in 2016, she voted for former President Trump during that election. Talk to me a little bit about her thinking, Josh, and how this could move the needle with the undecided voters.
Yeah, well, the people I was focusing on in this piece really were that narrow group of undecided voters who are going to decide the election. A lot of committed Republicans like it when Trump talks about abolishing term limits. A lot of Democrats like to get upset about it, but their votes aren't really up for grabs on either side. So the focus of these focus groups and the voters that I talked to were people who had either been former Trump voters, former Biden voters who are now undecided. The woman you mentioned, Lori McCammon, is a grandmother in Wisconsin I talked to, voted for Trump in 2016, but as she's witnessed January 6th, she's listened to MAGA media figures like Steve Bannon talk about multiple terms. It scared her into deciding that she wouldn't risk another vote for Donald Trump. And she told me, as you said, she's planning to vote for Biden in November no matter what.
Hey, while we have you, and one thing we wanted to ask you, and this was certainly a story that we've been talking about this week a lot, and this has to do with Donald Trump, a video posted to his social media account, that referenced a unified Reich as a potential news headline if he won a second term. Devil's Bargain, bestseller. You really got inside Steve Bannon and the road to the White House for Donald Trump the first go round. How are you thinking about some of the terminology that's being used, the rhetoric that's being used by Donald Trump?
Well, this is something that we've seen going all the way back to Trump's first run in 2015 and 2016, that kind of winking at the far right, either through phrases or memes or videos or what have you. I don't know whether this was intentional or not, but given Trump's background, given the praise he heaped on some of the Charlottesville protesters in 2017, another earlier controversy over anti-Semitism, it's something that people in the press and people in the electorate, I think, are very alert to. So when something like this pops up in a Trump video, you see the media pouncing, you see the attention to it. And it's something that the Trump campaign, either intentionally or unintentionally, hasn't really managed to fix and bottle up and kind of clean up their campaign.
Right.
But I think we can see based on this, it's something that we're going to have to keep an eye on going forward.
Right, and certainly those undecided voters are keeping an eye on too. That maybe explains what you just talked about in your story. Hey, Bloomberg Businessweek national correspondent Josh Green. Josh, thank you so much.
You're listening to the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Selling souls, rock and roll, any other game. Working for a living, working for a living.
Well, it is graduation season, so over the next few weeks or months, hopefully, young people will be going off to their first post-college jobs. Bloomberg opinion columnist Allison Schrager covers economics, and she writes in one of the most read stories on the Bloomberg terminal about an interesting trend that she's noticed, at least according to one recent survey, and that's that more graduates are looking to jobs in the public sector.
They are. Allison Schrager, a senior fellow at the Manhattan Institute. In addition to being a Bloomberg opinion columnist, she joins us here in our Bloomberg Interactive Brokers studio. So an important caveat, some of your best friends work in the government.
Actually, I don't have a lot of friends in government, but
but you wrote in the piece.
Yeah, but there's no shame. I mean, it's a reasonable, it's a respectable career path.
It is. We all know people who work in the government. All right, tell us what's going on. I have a 21-year-old, just got one more year in college, but I will say that working in the government is certainly on her radar.
Really?
Yes.
Well, because I was surprised, because the survey, did a lot of sort of hype about, government is up and tech is down. And then you saw the numbers and it was like up from 5.5% to 7.5%. And tech is down from 23 to 21. So you're like, all right, well, people still prefer tech. But what really concerned me was that there was another, the listing of what you're looking for in a job. And the number one thing by far overwhelming was stability. And last was a fast growing company, which is just like when you're young. I mean, if you get on a fast growing company path, this is how you get rich and successful.
Well, we love how you start the story in a week where we have been obsessed with Nvidia and still are, that everybody's looking for their Nvidia, right? You want to be with that company that's going to be the hot new thing, hopefully get in early, get options and make a lot of money. That's it.
Yeah. But no, they want stability.
I will say for my daughter, I don't know that that's it. And she's going to hate me that I'm talking about her.
She's not even a senior.
No, but they start early and there's a lot of pressure. But on way to doing something probably in the private sector and possibly in the investment world. But that experience is certainly looked at highly. Or can be.
I guess it depends on what you do. I mean,
Yeah,
I think
sure.
what struck me about it is it's like there's been a downward trend of working in the government. So, of course, but we've had a lot of like new policies in the last couple of years that aim to grow the government and grow manufacturing was also a big growth area in terms of job interest. So, I mean, these are policy priorities. So maybe it reflects that.
What does it tell you about the idea of stability and the way that some graduates might be looking for more stability rather than that path to being the next Jensen Huang?
Well, I mean, there is all this evidence, like Jeannie Twang's generations, that has all this evidence that young people are more risk averse. So I guess, I mean, I think that would be the concern, is that they're going to be less dynamic and less risk takers, which, you know, means less growth for the future, which, you know, we need them to pay for all of our retirements, so that's not good.
I've already warned my daughter.
So I said it could reflect that like, hey, you know, I don't want to be at that fast growing company. I just want the stability, and that might reflect more risk aversion. Also, I mean, this is a generation that's had a very tumultuous last couple of years.
Yeah,
so I mean, maybe the
exactly.
stability is just very appealing after, you know, having their end of high school and honestly almost their entire college career be incredibly chaotic.
I will say there's also this revolving door between the government and the private sector. And
Yes.
it's pretty incredible to see, and especially with politicians in the House and Senate. Like, ex-politicians go from making, I think close to $200,000 a year maybe as a member of the House to like $800,000 a year being a consultant for some of the companies or industries that they used to actually legislate. And I wonder if there's any sort of visibility there.
Well, you know, it's kind of weird to say, but I hope that's it. Because then at least there's some ambition. Because I think when I think of most people aspiring to work at government, especially where most of the government jobs are, it's like at the state and local level.
Yeah.
Which is, you know, more like parks and recreation.
Yeah.
You know, than working for the SEC.
Which could be fun. No,
Yeah,
just kidding.
Yeah, it totally could
Again,
be.
someone needs to make the world work. And when I posted the column on Twitter, so many people wrote, and they're like, excellent. It's great. People have such a great sense of service. Which I then felt bad. That's not what occurred to me.
That's interesting. Why do you think that didn't occur to you?
Because I've never worked in the government. Actually, not the U.S. government. But I mean, I always thought of it as being sort of like boring and stay safe. And I always wanted to like do something, you know, a little bit. But I mean, that might be my bias. Maybe I also don't have a good sense of service.
I don't know. That is super interesting. And I do think that maybe there are, like, we've gone through some generations where it's like big government, what do they do? It's those people there forever and, you know, you have to dust them off kind of thing. Forgive me, not my view, what people say. But I am encouraged when I hear a younger individual say, I want to be part of government. Like, I want to help, you know, create policy. I want to do that. And so I think that's kind of interesting.
Or is it like a lot of these jobs are like state and local level? They're not glamorous, but they really are important. And, you know, we all need them to make the world go round.
Exactly. One line I love in your column, what explains this shift? Perhaps they just feel grateful to be working. Because like this idea of, and I've heard this from, you know, various graduates, like it's tough, the job market out there. Which is amazing because we talk about it being tight and that there are jobs out there, but that many are finding it tricky.
I think I wrote a column about this a couple of weeks, or maybe it was last week, that, you know, I think we often forget about the fact when we talk about generational strife.
Yeah.
That like your first job, getting that first job and getting that good first job and getting a foothold in your career is always hard. And it's hard for every generation. It was hard for us.
It took me a year and a half to finally get something and not settle, to be quite honest.
Yeah, and we get into these generational shifts, but I think it just doesn't change. It's hard to become an adult. And it's hard to make that transition into the like having a career and feeling stable in your career. And it's never going to be easy for anyone.
It's because we don't want to be adults. Tim and I were talking about
this generation does, though, apparently. Like, they're not looking to be like poets somewhere. They want the government job.
Yeah.
At the end of the day, it's just one survey.
Mm-hmm.
Do we have to think about that a lot?
Well, you know, and it's a small survey. It's only like 2,300 people. I think the reason why I felt like it was worth writing about, though, is it does seem in line with other surveys I've seen that put such a high premium on stability.
Yeah.
Such an aversion to risk. So it's consistent with that. Because, normally you wouldn't be like, okay, a survey of 2,500 people, like 2% more want to work in government, big deal. But it does seem consistent with other things. And I was struck by, they had an interesting chart where they did the correlation of where job opportunities are. And it was a very sort of perfect correlation with, you know, people feeling like disenchanted with finance and tech and more with government and manufacturing.
I will say that, having covered a lot of different business cycles, that I do feel like companies are very, very quick that if there's some pressure or something, they'll cut jobs, they'll cut costs, because that's what, certainly if they're publicly held, that's what Wall Street and investors want. So, that can be pretty uncomfortable to be around.
Yeah,
right?
Although we do think of government as more stable, but I mean, especially if you're working at the state and local level, municipal
Maybe not,
finances
right?
aren't
That's
looking
true.
that good, that actually you might be better off in Nvidia.
Or maybe
right.
if you're in a part of a cabinet.
Jeez, Allison.
Sorry to throw water on your safe
Or if you're part of
option.
a presidential administration.
Yeah.
You never know what's going to happen come November.
Really, really fun column. Something to think about, though. And like I said, just talking with my daughter and some of her friends, like it is interesting that they are looking at this and kind of
Grad school?
interested in it. Yeah, they'll be grad school.
Fortunately, it's not
Ka-ching,
expensive.
ka-ching.
Oh, wait.
Oh, does it cost
Yeah,
a
it
dime?
doesn't cost
Nothing
a
at all.
dime.
Allison Schrager, Senior Fellow at the Manhattan Institute and Bloomberg Opinion columnist. Check out more at BO.Go.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, everybody, we're driving to the close. We're talking with Bill Maloney because
Because he's a legend.
he's a legend, and it's also just kind of an interesting market. And it's just, here you think Nvidia's going to come out of the gate, and it is rallying in a big way, no doubt about it. But you're not seeing it translate across. And even though we did see some enthusiasm out of the gate earlier, we were just talking about the hot manufacturing data. We talked about that with Stuart Paul earlier, and it just is enough to push up yields higher, and it makes everybody kind of rethink, all right, where's our environment right now? Every tick he says, he's like just focusing on.
SQUA on the Bloomberg terminal.
SQUA?
Yeah, that's how you get to Audio Squawk, and you can hear Bill Maloney all day.
Worth listening to. All right.
Definitely.
Also worth listening to is Lauren Sanfilippo. She's Senior Investment Strategist for Merrill and Bank of America's Private Bank. She joins us, Bank of America Private Bank, I should say. She is joining us from New York City. Lauren, good to have you here with us. I'm always interested because you guys have wealthy clients, those who deal with you in the private bank. What do they want to know about this environment?
Well, for sure they want to be opportunistic here up ahead of the election. They're watching a market that just seems to be straight up and to the right. And, I'd say what we're telling them on a sector level, at least, is to buy energy here. We think it's a great place to put money to work. We're looking at some good balance sheets for energy, valuation still attractive. There's still that energy transition that's in front of us. So, we try to be opportunistic with our clients.
Why is energy attractive to you?
So as I said, they have those fortress balance sheets. I think another way to think about it, though, some of these long arc stories, and I think this market likes narratives, we think about hard assets, hard power, and hard hats. We like hard assets, that commodities tilt, just as an inflation hedge, geopolitical risk hedge. Hard power, we think about the fact that security, the world we're living in, right? Cybersecurity, that's also included under hard power. And then hard hats. We have these massive legislative packages out there. They're being awarded now to companies, and the spending spigots are clearly open.
So narratives, I like it. And you said kind of like hard assets, it sounds like. What's interesting is AI in a day when we're focused on Nvidia, which is doing very well compared to the rest of the market, soaring in today's session. What's the AI narrative and AI investment play that you think makes the most sense? Is it the hard asset play, if you will, like the power centers needed to power the data centers? Pull that line through for us, if you would.
Carol, yeah, I agree. This is sort of a both story in the sense it's software and hardware. So AI, we still believe AI has a place in portfolios, core holdings, right? I don't know if you buy it at this level today. Valuations have obviously run up, but I think AI's impact will be measured in years. It's not like a quarter to quarter type play. We're seeing, though, some real profitability come through, though, on this whole early innings of this AI revolution. So it's a hardware and software play for sure, and data centers certainly part of that story. Power, electricity, GPUs, the whole sort of ecosystem.
Which part of the ecosystem are you most bullish on?
Right now, I mean, utilities, it's kind of like the underdog story, right? I mean, I think it's the tertiary story to the fact that utilities are defensive. So you sort of saw utilities work really well last month, April, when we had that pullback in the market overall. But it's that power producer. It's the setup is right there. I mean, we need more electricity devoted to those GPUs, the data centers. Then you start thinking about cooling equipment, and there's just a lot of tentacles to the story.
Interesting. And I'm looking at utilities. It's your third best major industry group out of 11 in the S&P 500 for the year, up about 11%. Above it, though, Infotech, which is up 17%. Communication services up almost 20% here. So investors, we know kind of what's been some of the trends here. I don't know. How do you look at this market more broadly in terms of, I don't know, does it need a breather? Are you thinking about rates on a regular basis and the implications of that? It just kind of feels like day to day a bit manic in terms of what we think might happen next.
Manic, it's probably a good way to put it. I'd say, though, there are plenty of reasons, though, to still be positive on the market without getting too manic about it. I mean, consumers are still spending, right? Businesses are still investing. There's a lot of CapEx. I mean, I think that's one great underlying thing we learned from earnings season this quarter, right? Businesses are certainly still investing CapEx, putting up big numbers, buybacks. I mean, we even had Atlanta Fed GDP at an estimate of 3.6%. So, and we're more than halfway through, right? I mean, we're closing in here on the end of May here. So, a lot to still be positive. I mean, try not to be too manic about it, but there's a lot out there to be bullish on.
What out there concerns you, though?
Yeah, so inflation, sticky. I mean, isn't that the obvious answer? It's going to be the predominant focus now for once we close in on the end of earnings season. And then the focus for markets really will shift back to that macro data. So inflation for sure. I think another risk, volatility is basically absent. I think volatility is already on vacation right now. The VIX is super subdued. But, geopolitical flare-ups, let's not completely rule it out, right? I mean, I know we temporarily see some price swings following some of those flare-ups. We've seen that a lot this year. But, I think there's always that sneaky potential for geopolitics to matter.
Hey, Lauren, earlier we were talking about a story that's among the most read and about kind of private credit's problem, that they've got a lot of money to put to work. And so they're having to do some interesting deals, maybe, take down the rates in terms of when companies need to do a deal with them, they're getting lower rates, which, obviously you think about in terms of returns for investors. Having said that, you are part of the B of A private bank. How many of your clients are accessing private credit, are interested in doing private credit, that the private markets are what they're really interested in today?
A lot of focus actually has been devoted to this private credit sleeve, I'll say. And, it speaks a lot to clients hear about this liquidity environment, right? And so immediately that's sort of like the intriguing factor. So private credit, yeah, we are going to have to do more in this space sort of through year end. And we're up against an election. So that's another consideration.
But I mean, are your private bank clients increasingly, you guys putting investments for them into private credit?
Yes, and I think that's an industry change sort of this year, right? I do think that we're sort of ebbing towards that. This is the year.
All right, going to leave it there. Hey, Lauren, thank you so much. Lauren Sanfilippo, she's Senior Investment Strategist for Merrill and Bank of America Private Bank, joining us here in New York City.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.